Okay, so this week is going to be a big one. There's going to be a lot of volatility this week, especially around Wednesday to Friday morning. There's going to be a lot of prints released this week. Prints that a lot of the retail investors as well as the professional investors are going to be looking at. A lot of it's related to the Fed and interest rates and inflation. So yeah, let's start with Monday. Monday, there's sort of one that might be important, and that's the Dallas Manufacturing Index. I don't really know how much relevance it plays because this is a print that not a lot of people pay attention to, but some people do speculate that because the data from this print actually comes from the Fed. They actually collect this data, so the Fed might be looking at this. So yeah, there might be some relevance here. Obviously, you'll see that it was a downtrend since May month. A lot of the figures that we're going to look at, you will see that since May month, there was a trend downwards. So just keep that in mind. So remember May month. So yeah, obviously above zero means growth in the manufacturing space. Below zero means a shrinkage or a decline. Then on Tuesday, at 9 o'clock, we will get the S&P House Price Index. And once here, you'll see as well, since May, there was a decline going downwards. So we'll get some new figures there. Also some signs that if we get an even lower figure, obviously that means that the house bubble is really popping quite substantially in the US. And we've had a lot of warnings and fears about the housing market basically collapsing. So this is just another indicator. And then on Wednesday, this is where there's going to be some volatility starting up. And the first is going to be this is now before market open, 8:15 Eastern Standard Time. So you just need to convert your time zones. This is basically New York time. The ADP employment change. So this is the private sector employment change. So this we wanted to go higher because the Fed wants to see more people employed. They want to, the Fed's basically main objective is to have everybody employed, or as much people as possible employed. So they want this figure to go up because that will also indicate to them that interest rate hikes are working and people are going back to work. So if this goes higher, there will most likely be some optimism in the market. Then another important one, and that is the second estimate of the GDP growth rate. This is now the third quarter. So this is now the second estimate. So this last figure here, this is just an estimated figure. So we're going to basically update this figure. So this figure is going to change to something else. You can see obviously that we've had a bit of a downtrend here for 2 months. That's why a lot of people are saying that we're in a technical recession. So yeah, this is going to be an interesting one to watch. If this one suddenly turns negative, yeah, then we're deep in a technical recession. Yeah, the Fed doesn't agree that we're in a technical recession. So whatever that number means to you. Then there's also going to be the job openings coming out. This we also wanted to sort of go a little bit up. There needs to be jobs available. People need to take these jobs. These are going to be people obviously moving to, or this is going to be job openings. So this is a sort of a highly contested figure as to whether it goes up or down. Is it a good thing or not? Because you obviously want jobs to open, but if they don't get filled, then prices go up. So, or actually salaries, wages go up, and that usually fuels inflation too. So sort of in a good situation, you want this number to go up. In a bad situation, you actually want it to go down. So yeah, this is an interesting one to follow. But yeah, this might be a market mover. And this is at 10 a.m. Then this is going to be a big one. This is the Jerome Powell speech. This is at 1:30 p.m. Eastern Standard Time. And a lot of people are going to be watching this, going to be basically reading his body language, his tone of voice, his posture, his whatever, to try and figure out if he's hawkish or dovish. If he's hawkish, it probably will mean that the market's going to take a bit of a downturn. It means there will be negative sentiment in the market. If he's dovish, it means that there's probably going to be a positive sentiment, meaning the market will probably have a bit of an upward trajectory. So generally your S&P, your Nasdaq, your Dow Jones, they will probably increase. And also, but usually during these speeches, the speech is, let's say, 15 or 30 minutes long. So during the speech, there might be inflection points. The market might be quite volatile from 1:30 to, let's say, 2 o'clock. And then after that, it should sort of have a bit of a general direction. Then on Thursday is the big day. This is the day that everybody, is going to be quite busy. There's going to be lots of volatility, especially with market open, because you'll see a lot of these prints are actually released at 8:30. So it's going to be before market open. So the first one is the personal spending. So this is the one that the Fed mainly wants to fight with, pushing up interest rates. The Fed wants this one to come down and stay down for a longer trend. If we zoom out now, so this is obviously over the last year. If we zoom out, we were here, that's where we were. So now obviously this is the last 5 years. And here in the middle, you can see this is obviously where COVID happened. If you look at the average height of the bars after COVID, the lockdowns, and before COVID, you can see that personal spending has increased quite substantially. It's roughly double if I sort of were to estimate. And that's actually what's causing inflation. That's the basis of what's causing inflation. Obviously, we know we've got supply chain shortages and the oil price and all that, but you can see that there's definitely a consistent increase in personal spending. So the other part of that print is the personal income. So the personal income, this one we sort of wanted to remain flat. We don't want it to go up too much. This is also same time. If this one goes up too much, it means that there might be a wage price spiral, which might also have an effect on inflation. That might also be bad. We also don't want it to go down because or too much. I mean, if it can go to zero and stay on zero for a while, that will be ideal. If it goes down too much, it means that we might hit the recession a bit harder. If there is a recession, it will be much more severe. So the interesting thing about this, if we zoom out now, I'm going to zoom out again on this one for 5 years. So we were there, but now this is a 5-year time horizon. You'll see that if you look at the general height of the bars here and you compare it to here, it's roughly the same. So what people have been earning before and after COVID has roughly been the same, but as we saw in the previous graph, they've actually been spending more. That might be due to all the stimulus checks into the economy. So that's why the stimulus checks are actually fueling inflation a little bit. Then another big one that's coming out is the PCE, the year-over-year figure. As I've explained in my previous video, I'll link it up here. There's going to be, there might be a very good reading here. So we want this reading obviously to come down because this is one of the main readings that the Fed uses to decide whether they need to increase interest rates more or less. This might be a good figure because of what happened a year ago. A year ago, there was a big spike in the interest rate, and obviously we compare the current figures to then. So how the whole system works, it's not actually a perfect system. The result will be that we'll actually get a lower figure now. So that might in turn actually cause a lot of people to get optimistic and buy into the market. So there might be a buying opportunity here for like 10 minutes, basically get in, get out, or get in, stay in for 10 minutes and get out. So maybe if you've got some pre-market trading, get in before 8:30, buy a small amount of maybe, let's say the QQQ, there's some speculators there, because we're trying to chase the speculators basically. There's going to be some speculators in QQQ, but I think it will probably spike up and after a while it will come down. It is also going to be difficult because there's a lot of other prints at the same time. So I kind of wished that this one came out separately because then it would be a nice trading opportunity where you can quickly get in, get out, make a bit of cash. But because there's a lot of other prints exactly the same time, 8:30, it's going to be a bit of a mixed basket because we don't know what the market is responding to because it's going to be all these numbers coming out and a part of the market obviously going to respond to one number and another part of the market is going to respond to another number. So yeah, it's going to be a bit of a gamble at the end of the day. The next one is the initial jobless claims. So this is obviously people that are filing for unemployment for the first time. So here we also actually want to see an increase in numbers. That would be a good thing for the Fed, which means the Fed will will slow the interest rate hikes, which means instead of maybe 75 basis points, they'll go 50 basis points based on this figure. This is a very important figure. So we want this one to go higher. If it goes lower, if it drops a substantial amount, that's going to be very bad. It means that the Fed's probably going to see the interest rates are not having the effect that they wanted, and they'll probably just increase it more. Then we also, a little bit later, this is now after all the other prints, that all came out exactly the same time. This one's only going to come out at 10 a.m. This is the ISM in manufacturing PMI. You can see it's also a proper downtrend. As soon as we go below 50, then it basically means that manufacturing is shrinking. And we kind of see the same in the Dallas index. So there's definitely there's multiple sources all confirming the same thing. So that means there is an economic slowdown, which is a good thing in a way because it might help with inflation. So we're just going to get a new figure there. And then on Friday, we're going to get also a couple of important figures, and this is the unemployment rate. So the natural unemployment rate usually sits between about 4 and 5%. It's sort of a theory that if your unemployment is between 4 and 5%, then inflation should be under control. If it's below 4%, that's usually when inflation starts rising. So we kind of want to see this figure go back to between 4 and 5%. So an increase in this figure would be good. A decrease would be bad. So if there's a decrease here, that will tell the Fed that people are not filing for unemployment, so they're not struggling enough, so interest rates needs to go up. Then the last one is the non-farm payrolls. These are basically newly employed people. So here we actually want to see a higher figure. We want to see people joining the job market. So this one also needs to actually increase. At the moment, as you can see, it's quite low and it's decreasing. So we're also hoping for an increase here because that means that the balance in the economy is being restored. If this number is too low, obviously it means that there's too many job openings, nobody's taking the jobs, and it basically means that employers are forced to increase wages in order to attract staff. And that will just fuel the wage price spiral, which obviously helps inflation, and then inflation just gets out of control. So we kind of want this number to go up so that there's more people taking the jobs, which basically saying that the wage prices are correct and people are taking the jobs. They're not like withholding jobs or like not needing to go to work. And then the employers are forced to increase their prices. So yeah, we kind of want to see a higher figure here. So that's basically the prints we're going to get this week. It's quite a couple of good prints that we're going to get. And so Thursday is going to be a very volatile day. So yeah, I hope you manage to make some money on Thursday. And I hope you like this video. If you do, remember to press the button. If you want to see more, remember to subscribe. This is Steve. Happy trading. Until next time. Ciao.